The latest credit survey by the Central Bank of Kenya for the year 2015 indicates that in quarter 4, 60% of commercial banks in the country increased interest rates on loans to mirror what they termed as the high cost of funds and higher coupons on treasury bill rates. According to the 2015 annual banking sector report by Cytonn Investments, the banking sector grew at a slower pace due to a tough operating environment.
The conditions are quite tight. Overall, money flow already is restricted. So what we saw in 2015, a tough economic environment, directly filtered into the banking system. And if you saw what happened within Q3 and Q4, yes, there was appetite to actually participate in the deposit, to actually give money to the banks for deposits because of the high rates. But remember, this was within the commercial, not commercial, institutional investors level. But within the mass market and retail, it still remained constrained because that money, flow of money was constrained because of the overall tough economic environment. So that's what filtered into the performance of what we saw in the numbers of customer deposits. But
the number of loans and advances more than doubled for the 11 listed banks, while non-performing loans increased.
Loans and advances growing at 19%. But what's interesting over here is that loans and advances growth has now increased over deposits growth. So banks are now, there are those who are able to gather deposits, but we saw an increase in the number of loans compared to the deposits which were given out.
Equity Bank was ranked the best performing, followed by KCB and I&M Bank respectively. He says the banks get a lot of deposits, hence have enough room to lend compared to other banks who engage in expensive deposit mobilization strategies.
These are banks that have now moved to change the landscape in terms of the competitive environment of Kenyan banking industry. If you look at that one now going forward, these are banks that have come out and they have clear strategy, they have clear specific niche that they are serving, they know their client, and they know what they are doing. And they are even coming up with more efficient ways of doing business in terms of how they can reach their clients cheaply.
He says the sector is experiencing volatile transition to a more stable, efficient and transparent industry with better governance and increased regulation, which will in turn lead to increased competition within the sector.
Banking dynamics, it's much more different to what we have in the global markets, which is the method of operation and the strategy which a lot of foreign banks have continued to adapt into in this market, but have not done it very well. So you look at alternative methods of service delivery, disbursement of loans through your mobile phone. You look at being able to garner deposits through a mobile phone. You look at banking halls where there is more than 1,000 people. You look at agencies which are spread across the entire country in all different counties. That's really what these banks are doing different.